All right. Welcome back. Your boy Yadi, back again with another video. All right, just the daily grind, man. Trying to find consistency in what I do, right? So I'm gonna get right into it real quick. Clearly, we have started breaking down. So this chart is more bullish than it is bearish or anything else. I'll go over the prior entry I think I had set up, which was in here, I believe. Remember, like here, right? Yeah. Stops under the low, targeting like up here, right? So this clearly got ran, went into profit, went up 1 to 2 before ultimately turning around. Which again, that's all right. That's all right. We just gotta figure out what it is we're doing right, what it is we're doing wrong, and work on that. All right. So I'm gonna get right over here real quick to the planning part, as I'm trying to make the proper changes to what it is I'm doing in respect to what went wrong and what went right. So risk isn't the issue. The management. Granted, if this trade was taken exactly where I wanted it to be taken here, it would have went 1 to 2. So at 1 to 1 would have been a break even. So management isn't an issue. You got to be in the trade to manage it, anyways. Trailing the stops, let's say after 1 to 2, that can be worked on. I haven't reached that far in the process yet. And then the partial system. So I'm gonna leave the risk management for now, right? The trade plan is where I need to be more specific and make the changes I need to make. So far I've made just a few more specifications on what it is I'm doing. So again, I'm gonna be finding and taking entries off the analysis done from the monthly, weekly, and daily. I'm gonna take the 4 hour out of it, the intraday time frame, as I am trying to be swing trading. I don't want to be within the daily. I want to be using the daily as it's the order blocks given on the daily, they hold up. So I'll stick to monthly, weekly, daily for now, right? The monthly candle, I'm gonna use it specifically for direction. So I'm gonna look for within the monthly candle if we've broken to the top side or bottom side, right? The weekly candle, I used to see the order flow and the structure breaks. So the higher highs, higher lows type of thing. And when the candles themselves break, as there are how many? Three, four, three sevens. Yeah, there's like 4 weeks in a candle. 4 weekly candles in a monthly candle. Let me say it properly, right? Just as there are 7 daily candle within a weekly candle. So I'm gonna try making this a bit more numbers based and go off that. And by that I mean, if a monthly candle breaks to the bottom side, and I'll get to that on the chart, there should be 4 weekly bearish candles breaking to the bottom side, delivering the monthly. That makes sense. And then the daily comes with that as well, but not gonna get too complicated with it. Right. So those are only a few changes I'm gonna make for now. I'm gonna switch back over to trading view. Start the analysis from the monthly again. All right. So where normally I'm over here looking at all of this and all of this and this and this and all of these. Right. I believe the focus really should be right here, because just right here has all the information I need. All right. So coming into today, right? Stop the analysis. Monthly candle broke to the bottom side. So monthly is bearish. I'll even type that out. So monthly is bearish. All right. So monthly is bearish. We'll go to the weekly. What you'll see is that we're making lower lows, lower highs. I mean, this one went above this high, but that's a liquidity grab. But we broken down lower low, lower high, lower low, right? So part of how I'll try doing this analysis now is from the monthly break given direction down, being on the weekly, we can look for the last break. Okay, so on the weekly, we'll look for the last break of a weekly candle. So Monthly bearish, we went down. Monthly for direction. The weekly for the break. Let me see. So monthly, right, for the direction. The weekly candles see the order flow and the structure breaks. Right. So the last break coming from this low right here. Now put a line right here as this high being protected. Right. And then if I go to the daily, what you'll find is the inefficient candle responsible for the break. And that one being right here. Now, let's see. We can take 50% off this candle, enter more specifically off the wick, the unmitigated wick right here, which we'll see. We'll see how I can go about using this information. So part of it is just taking 50%. This is the whole impulse. Stop loss above the high. So entry, stop loss here, and keep targeting the lows. Let's see, one, two. What was the first? Let's see, management wise, the first. So break even 1 to 1, trail stops 1 to 2. So let's say keep it at 1 to 1 maybe. Well, put it at 1 to 2. 1 to 2, trail it 1 to 1. I'll mark out the 1 to 1 actually. So 1 to 1 is about right here. All right, so this is 1 to 1, and then the 1 to 2 would be right here. Okay. Whoa. So this would be 1 to 2. Boom. Okay. So these are the possible entries. If I take 50% off the zone, high to low to high, take 50% of that, it gives us entry right here. Oh my goodness. Put a line there so I can do it. There we go. So half of this zone gives us entry. I'll just duplicate this. It gives us entry right here. Stop loss above the high. Keep it protected. And for the same move, we get twice. Okay. So maybe I can split risk on this. Okay. I'm actually interested in this. So I could take two trades. Two trades using the zone, right? So two trades using daily zone. Actually, tell you what I'll do. Put it over here. So trade plan, monthly candle direction. All right, would that be risk management? Yeah, it would be risk management, wouldn't it? I'll put it up here. Taking two trades off daily zone. Splitting risk. Splitting risk into 0.5%. 0.5 to 0.5 and 0.5. I'll just keep it simple and say that. So taking two trades off daily zone, splitting risk into 0.5 and 0.5. And taking, hold up, so I'll put this under actually. And then, okay, actually, let's see. Thinking too much here. So taking two trades off daily zone, splitting risk into 0.5 and 0.5. Using daily, let's see, using the daily block as one entry and 50% off the same block as another entry. Okay. So two entries taken. One is using the inefficient candle right here. So the whole thing stops above the high. The other one using 50% of that. See, boom. That's fine. Well, let's see. Mm, okay, that's fine. So using 50% of it. Okay. So using 50% of this zone right here, the inefficient candle. Right. So entry here and here. I'll leave these two up running. I can actually. So this one would be what, 1 to 1 right here, partials, and then 1 to 2. No, 1 to 1 would be, what's it called, break even on this one, and then 1 to 2 would be trailing stops. This one would be 1 to 1. Where's the 1 to 1? Oh wow, 1 to 1 right here, which would be break even, and then 1 to 2 trailing stops. Okay, but I keep this down here right now. So honestly, that's about it for this one. That's everything I'd need to do, really, in terms of planning the next trade idea, right? So inefficient candle, we can take the entry off of that, or we can take it off 50%, as if it pulls up, gives a deeper mitigation, and then breaks down. Or if it pulls up right here and then goes down. Kind of like how this one came right to the candle, tapped and then went. So we'll I'll leave this be. Just slight adjustments to the trade plan, not too much. Taking entries off this, trying to swing trade more. Not trying to do too much complicated, you feel me? So I appreciate y'all time, 12 minutes. You feel me? Allowing me to share information. Thank you kindly. I hope y'all enjoy your day. Hope y'all learned something. This video wasn't much, but I'm just trying to refine what it is I'm doing, improving at it. So thank you very much and enjoy your day.